How's it going, everyone? This is Daniel. In this video, we are going to be talking about SoFi stock. We're going to go over some massive updates for SoFi. We're going to talk about why Cathie Wood started buying SoFi stock. We're going to talk about the new Supreme Court ruling that affected student loans. We're going to talk about what this could mean and also cover why some analysts are downgrading SoFi stock. And we're going to be hearing from one of the analysts that's covering SoFi. We're going to cover all this important information, so make sure you stay tuned. Now let's get right into the video. So as you can see over here, we have SoFi stock that is performing relatively good compared to the overall stock market. It's actually doing phenomenal, which is it's up 85.44%. The last 5 days, it has pulled back 2.85%. But for the month of June, it has performed very well. It's up 20.2% in June. So that is really fantastic. The stock has been aggressively going up. We've been getting a lot of price target changes for SoFi. And unfortunately, the past few weeks, we've been seeing some downgrades, and SoFi stock actually pulled back to the downside. So we hit a high of $10.23, and then we pulled back all the way below $8. Right now, as I'm recording this video, it's currently sitting at $8.34. So let's go over and talk about some of the important updates that we've got for SoFi. One of them being that we have ARK Invest Cathie Wood actually buying into SoFi stock on the ARK F ETF, which is the ARK FinTech Innovation ETF. If you go over some of their holdings, SoFi is in the 29th position, and they own 281,770 shares, market value of more than $2.4 million, and the weighted on the ETF is 0.25%. So this is a really good indication that we've been getting a lot of funds, institutions getting into SoFi. In the past, we talked about last year when we see this massive sell-off to happen for SoFi, we actually got some institutions selling out of SoFi stock. But right now, institution ownership, ETFs are getting in and tiptoeing and buying into SoFi stock. So that is a great news. Let's go over some of the important financial and some of the companies that are actually holding their ETFs. So when you go over here to look at the ETF weight for SoFi, let's go over detail. As you can see, we have all of these ETFs that own SoFi stock. So we have the number one position. We have 8.61% of the Amplify Digital on online trading ETF owns SoFi. These are the top ETFs that own SoFi currently. You can go in detail, look at exactly, what are some other ETFs that hold SoFi. We have in Vanguard, also owns SoFi, which is 0.09%. So we have all these famous ETFs also buying into SoFi at the current moment, or holding SoFi. So that is really good indication in the short term, So we also have the earnings coming up in August, for around the beginning of August. So that is going to be really important for SoFi too. Last earnings, we had a significant sell-off that happened, but the continuation move to the upside came in as the student loan payment was announced that it's going to be resumed pretty soon. So that is an important news that SoFi was waiting for. And we also had massive news that the Supreme Court blocked the student loan forgiveness program from Biden. And unfortunately, the stock really did not react into the massive news. This is mainly because analysts are saying that, all of this move that happened actually priced in the student loan payments, refinancing, and all the extra revenue that SoFi could potentially get. We're going to be hearing what the analysts are actually saying when it comes to SoFi, why they're continuously to downgrade it, because we had 3 back-to-back downgrades for SoFi. So we're going to be hearing from one of the analysts, and then I'm going to come back, and then we're going to go over, short-term price prediction for SoFi stock.
Dominic, I'll start with you with regard to just what we're seeing in terms of how this will impact the market overall. There are certain places where we could see a benefit and a drawback. Take us through where you think we could see, if you want to call it, a tailwind because of this Supreme Court ruling.
Sure, and thanks so much for having me on today. When we think about our coverage, which is a combination of specialty finance and fintech, what we're really focusing on the upside is for SoFi in particular to their numbers unfortunately, it is already baked into our numbers. And so we actually downgraded this stock at 975 just a few weeks ago. But that's really where we're going to see it, in originations of federal refinance loans. And that's kind of where we're most focused today on the upside.
So if it's SoFi, then there's a reason why, because they have carved out a niche. It was almost like a part of the genesis of the company to kind of cater towards some of that side of the business. Is it also a demographic trend that you're seeing for SoFi's client base about that particular group that's going to benefit the most, as opposed to, say, other payment or fintech type services?
So a lot of their business used to come from student loan originations, and now they've diversified that business quite a bit. And so it's less of a factor, and they've actually been able to hit their long-term targets released in their SPAC deal because of that diversification. They've really kind of leaned into personal loans. Believe it or not, you actually don't see a lot of overlap between their student loan product and those customers and the other rest of their customer base within their financial segment. And so there's not as much overlap as one would think, which means less credit risk.
All right. So Christina, the fintech story you can kind of see, but take us through how clear it could be in light of or vis-a-vis the decision that just handed down right now.
Oh, I'll use SoFi because it's just being discussed. And I question the run up in the stock. It's more than doubled this year because we keep talking about refinancing and how that's going to help volumes. But JP Morgan actually put out a note not too long ago saying that in 2019, 2% of student loans were refinanced. And that was when you had historically low interest rates. So why are we of the notion all of a sudden that there's going to be this massive wave of refinancing when for the vast majority of the people, it's not that beneficial to go with a personal provider like a SoFi versus, let's say, a federal type payments plan. So I do wonder about that in particular for that name. But it would help, if it was the case, it would help a lot of payment providers. You have Navient as one. That stock was a run-up too, and that's because it's a payment processor. But then Sallie Mae is a company that provides individual loans to students who already have loans. So they'll actually probably do worse because student loans need to shift. The students need to, or borrowers need to shift their money to pay off that debt and not pay off their other loans. So there is a concern there. And then one last point, Dominic, you just brought up the personal loans, which is obviously more beneficial because there's more return for SoFi. But is it not alarming that personal loans are growing and many of them are unsecured, therefore it would lead to delinquencies?
It's a great point. And, we did a note on this as well that, if you look at the average monthly payment of a student loan over the last number of years, it's really above $400 today. And on average, over the last 3 years, it's at $414 by our calculations. And so that would obviously impact borrowers' ability to pay and spend on discretionary categories. Think of all the flights people are taking. Think of all that, that activity that everybody's been doing in discretionary categories, restaurants. All these activities are going to be impacted because there's going to be a shift from consumer spending to bill payment. And all of these factors really do impact. We know that the vast majority of citizens in the United States don't have a lot of savings. And when you think about the average debt they're paying at about $1,000 a month, excluding mortgages, this $400 starts to really matter. And this is part of why on our specialty finance coverage, we do have losses ticking up. And we recently reduced yesterday our American Express outlook for revenue growth because of a number of factors, but this would put more pressure on spending than it would help.
So as you heard from the analysts, they're saying that the potential move that we saw all the way to $10.23 actually priced in some of the refinancing student loans revenue that SoFi could potentially get in the future. So they're saying it's kind of baked into the price right now. So the only thing that we can expect, for the next few days, the next few weeks until earnings, is that we still have 3 or 4 analysts that still have not revised their price targets for SoFi. So if we can get either an upgrade or a downgrade, that could be a massive, price fluctuation can happen in spite of that. So that is the important thing to watch out for. And another thing is, of course, the earnings, which is coming up pretty soon. So that is also another important catalyst to watch out for SoFi. But overall, if we can stay above $8, that will be fantastic for SoFi because, it is a pretty good price point level that we've seen in the past. This could be a really great support price to watch for SoFi. So if we can stay above $8 until earnings, and if we can get some phenomenal numbers on earnings, we could potentially see SoFi retesting $10. So that is going to be the most important things to watch out for in the short term for SoFi stock. Of course, I'm going to keep you up to date if we get any kind of analysts coming out and making upgrades with SoFi. I'm going to be posting a video about that. So make sure you stay tuned. Make sure you subscribe to the channel, turn notification bell. But I'll catch you guys on another video. Have a wonderful day.